What's up, ladies and gentlemen? I've got a guest here today. It's Mr. Booksy. Has been talking about on YouTube for some time now. Essentially an arbitrage, a difference in all-time highs and prices between Futu, Webull, Hood, TradingView. Different brokerages are showing different price levels, and this is obviously problematic, and I think that it's a good thing for him to have sort of a larger audience to speak on this with. So I guess I just wanted to be pretty straightforward and give him the opportunity to chat about his thought process here. So Mr. Booksy is here with us today. Thanks for your time, bro. I appreciate it.
Hey, thanks for having me on. I really appreciate it, Trey. So just really briefly, introduction. I've been doing TA on very quietly for AMC for about a year now. And recently we had Ape introduced into the marketplace, as you all know, on August 22nd. And with that came chart shiftings. And chart shiftings obviously are something that your program, whatever it is, if it's TradingView, Webull, etc., what they're doing is they're shifting your chart to try to match up with the shift that occurred, right, when Ape was derived from AMC, okay? So think about it like, if after August 21st or after August 22nd, AMC is now AMC minus Ape, then the rest of the chart should then be what? AMC minus Ape. You can think about it like percentages if you want. You can think about it like a multiplier, whatever you want to do. That should come from, normally in a stock, that should come from, if it's a derivative, you may not even see a shift. And we'll talk about that in a minute, but it should come from the cost basis. Like what was taken out, right? If AMC was supposed to be, let's say 61% or 62%, right? Then Ape would be what? It'd be the opposite of that. It'd be like the 38 or 39%. Okay, that should be evident in the starting price that occurred on August 22nd. What we've seen, though, is that during that first week, which in and of itself was really frustrating, right? That whole first week, we were kind of patiently waiting to see if they were going to shift the charts. TradingView was one of the last ones to do the shift. Others like Webull, they did it on that Wednesday and that Thursday. And then we've got other folks like Robinhood, Futu, which is Mumu, that also shifted their charts. Great. So everybody was happy, right? But then when you start looking at how did they shift their charts, we started noticing that the chart shift values were all different. So not counting after hours, just looking at the chart shift values. Right now, TradingView is at 44.61. And I'm going to pull up some screenshots. Hopefully this works. Hang on a second.
And while you're pulling these up, can you explain why it's problematic that we have different all-time highs on each of these charts that you have? Like you have Momo at an all-time high of 45.01, Webull at 48.44, Hood at 46.15, TV at 46 or 44.61. It's a pretty big difference, but why is this problematic? Walk me through this.
Well, just to put it really simply, right? In technical analysis, everything that you do, no matter what you do, everything is based on proportion. So when you are talking about anything, whether it's trend lines or fib levels, everything that you do is based on one price to another price. Okay, so if you're looking at something like a trend line, all right, then this is essentially a proportion. And when you're looking at fib levels, you guys can see this rainbow colored stuff down here. Those are also based on proportion because fibs are mathematical derivatives based on the golden ratio, all that jazz. You don't even have to know what it is to understand that if you have a different high and a different low, you're going to get different fib levels in between. So that's why it's super, super critical to understand that this really drastically changes how you interpret the present price action. Because the present price action on every chart is basically the same. So if you look at, let's say you looked at Webull or you looked at Hood or you looked at TradingView, you would see that, okay, ever since August 22nd, this little pocket region I've got here, all of this chart action would be the same. However, if your chart has different shift values, then some of you are going to have trend lines where it's like, oh, look, it just broke beneath the trend. But other people, if they have a lower low here and a higher high, they may have a trend line that does something like this, right? It causes an inability essentially to have any confidence that you have the correct value. Normally, what these vendors do is they have a little fine print that says, hey, because we're getting our stuff from these chart vendors, because we're getting our information, there could be delays, there could be slight discrepancies. But the price is always supposed to represent, right, what's as close as possible to what's accurate. But the bigger issue here is that when you get to these shift values, what it's doing is it's retroactively changing. I don't know how better to describe this. It's basically changing the relationship between this whole area, everything that came before, and what's going on right now. And so that's a big deal. If everybody has a different interpretation of what's going on over here versus here, you can't rely on things like fibs. You can't rely on things like trend lines like you used to. And you're basically at the mercy of whatever program you've got. So I'm going to pull up, I got some screenshots here. I wanted to show you all the differences. So.
You know, just to add to this, I always see people say that technical analysis doesn't work on AMC. And I would say that that's absolutely false, except in this situation where there's not much consistency. This is probably one of those few times where I would talk to the crowd and say, well, while obviously technical analysis still does work, right? But when you have a discrepancy, you've got a larger margin of error, and probability is certainly a different game here. So predictability of AMC certainly seems to be an issue here, you know? And I would imagine actually that some of these big boys with large amounts of money, old money, algorithms, whoever it may be, could probably take advantage of arbitrage. Like, let's say, I'm just going to throw out a random number. This is a hypothetical. Let's say that 70% of people who own AMC use TradingView to chart. And you know how fucking complex the freaking, my bad. I don't know if your kids are around. Sorry. I've got a bad habit of swearing.
It's okay.
My apologies. We know all these guys have freaking sentiment trackers and can track retail data and all the stuff that we're doing. So if they know, for example, that we're using TradingView and the all-time high is 4461, they might base their algorithms, their entries, exits, scalping, this, that, the other on Webull or Moomoo or who knows what all-time high. They might take advantage essentially of that arbitrage. So I don't know. This is certainly interesting. Go ahead.
It is, and it's a weird problem to have. I mentioned it to you earlier, but I've been trading for about 10 years. I've never seen anything like this not get fixed right away, and I've never seen them dig their heels in like this, where everybody kind of thinks they did it right. And so it's very strange. The only people that seem to be able to step in are people that feel unreachable right now. But yeah, I was just going to show you. So like this is Webull. It's at 48.44, and you can see that's clearly different than
drastically. Yeah.
44. That's $4. That's not a small amount. The further you go from the source, right? The further you go from the August 22nd backwards. So the further you are away in value, the higher those multipliers are going to make your differences look, right? So they're going to make them look really different. Also 48.44. I think this is another one for Webull. Hang on. Let me see if I got another one.
Sure.
Right here. Oh yeah, those Thinkorswim. So Thinkorswim, they're not changing. And this is another thing that I was going to mention is that Thinkorswim still has the 7262, and TD Ameritrade, who owns Thinkorswim, and Fidelity both are saying that they're not going to do chart shift because it's not appropriate. What's weird to me is that when I'm doing stuff on, I said TradingView, I meant Fidelity. TradingView, when I'm doing stuff on TradingView, it seems like the chart shift makes some sense, you know, to some degree, but they're actually digging their heels in the other way. They're saying that there shouldn't even be a chart
though,
shift.
right? Not Fidelity. Did you mean Thinkorswim, I'm assuming, instead of Fidelity?
No, both. Like Thinkorswim and Fidelity.
Oh, I was just looking at your screenshot. I was going to say, I don't think that's Fidelity, but...
No, this is Thinkorswim.
Yeah, right.
They're opting not to do the shift at all, which means their chart obviously is going to look really different. It's going to have this really dramatic drop, which is, it is what it is. Let's see what else we have. So, oh yeah, we've got the, man, there's so many of them right now. I would show you this. It might be kind of, what is this one? Hood. Oh yeah, Hood. This doesn't have the numbers on it. Let's see here. All-time high, 46.15. Oh yeah, this is another one that's different. Yeah. So this one,
Yeah.
you have to read the top here. It says 4615. So all of them decided to shift their charts. They're all using different formulas to figure that out. No one issued them like a consistent, here's the variable. And yeah, so they're all different. And I don't know, arbitrage or not, it makes it impossible for there to be a consensus for technical analysis. And a big part of TA, and I talk about this a lot, is it's not crystal ball stuff. It's meant to be probability. And the more you can reduce things like luck, then the better off your probability is. If any kind of a lurking variable that causes anything that can cause your charts to be a little out of whack, and where you happen to feel like, oh, I'm gonna get lucky, that's not good. That's bad. That's anti-statistical. Like, it's bad for statistics. So if you're looking at this and you have to wonder, like, well, am I using the right chart to get the right, key bounce level? And this is not a joke. Like, this is something that people set their buy and sell alerts on this stuff. People are looking at this. Yeah, and they're looking at this, and if it says like, oh, I'm hitting this fib level, I'm going to get out or I'm going to get in. And so people are making trades based on this data. Whether or not a person believes that TA works or not, it doesn't matter. Like, a large percentage of the market trades this way. Like, they use technical analysis. So all of your swing traders are going to be trading based on these technicals, and they're all appearing differently. So it's a big deal. Yeah, no joke.
Dang.
Yep.
Yeah.
There's a lot more I could talk about. I don't really want to bore you, but
that's solid, man. I think the important thing is that people are just talking about it and have the conversation, And
yes.
Admittedly, you're the first guy that I've seen even bring this up, so that's freaking wicked, man. That's wicked.
Yeah.
And
well,
go ahead.
Yeah, just so you know, I've been trying to lobby on Twitter about it, but it's Twitter and it's hard to get people's attention. We've been trying to encourage people just to go directly to the SEC and email them. And there's not much else I think you can do right now except just be noisy about it. I wish I had a magic bullet answer for y'all. I know we were talking about earlier, Trey, that one of the problems here is these are vendors, right? They get their information. If you ask Webull or if you ask Hood or you ask TV, you say, hey, where do you get it from? They're going to tell you this is where we get it from.
Right.
And then you go to these people and you say, well, where do you get it from? Well, we get it directly from the exchange.
But if they're getting it directly from the New York Stock Exchange, then why is Reuters, CBOE, Moomoo, and NASDAQ all different? That's fucked up.
Right. Why are the formulas different? So it's like, that's the thing, that these are multiples, these weird numbers I've got, and they're just all different. And it's like, so somehow math.
No, it doesn't add up.
The math is not the same. It just and no one is admitting. I feel like there's going to be some pride stepped on here. Like, no one's admitting they're wrong and they don't want to be wrong.
Crime.
So I know
it's crime.
So it's
bro.
Messed up.
Nah, we forget at our level, bro, that the big guys, the big boys at the top, they have ego and they have pride too. Probably more so than the average American. I'd imagine that these Wall Street guys have significantly more ego and pride than we do. I mean, you can see it in the nature. You look back on 2008. You look back on everything. I mean, these guys are full of ego, full of pride, full of I'd say ignorance, really, to the fact that they can potentially be wrong. And it wouldn't surprise me if it was that simple. As they just don't want to fess up and admit, because what's the ramifications if they don't? Well, if they don't, I mean, obviously so far nothing has happened. And I think really the only way that something would is if there's friction, if there's bloodshed, you got to piss these guys off. You got to hit them where it hurts. Otherwise they just won't do anything. So I think you're spot on the money, bro. I think noise, it goes a lot farther than you think. Noise makes a big difference. Noise is what allowed for the congressional hearing, who knows if that would have happened if people didn't speak out. So it's interesting.
Yep. And we've been plagued by so many issues, over the last couple of years. And this is one that, in my opinion, it's pretty easy to say, look, something's wrong. It's just numbers, So you can't hide these kind of numbers on these chart discrepancies. So it's really not something I don't think you could argue against. It's just a matter of getting it in front of the right eyes that can fix the problem, you know. And I just don't know who it is yet. I think it's got to be somebody up top because they're going right back to the exchanges. And I haven't been able to find. DTCC has like a data division, and they sell data, and they might be good people to reach out to if you guys want to try and lobby that direction. I've just been kind of emailing the SEC and these different vendors about it. So far, nothing really concrete, but
I actually have I've got Dave Lauer's contact. I might give him a call and just ask him some questions about this entire situation. Are you down for that?
Yep.
You mind?
Yeah, man.
You mind waiting
a
sec?
Yeah, if he's available, that'd be awesome.
All right, let me put you on mute for a second. Just give him a call if that's okay.
Yeah, go for it.
All right, appreciate it, man.
Mm-hmm.
We are sorry.
No luck. Sent the voicemail. He's probably busy doing something.
That's okay. Well, if you happen to catch his ear sometime and you could talk to him about it, I guess if I were going to ask him, I would just ask him how this could happen and like where we would kind of go to. He might have a better idea of who we need to contact. You know what I mean?
No, that was exactly my thought process, man. My thought process is Dave's an incredibly intelligent guy. He knows pretty much everything there is to know about market mechanics and market structure. And if there's anybody who knows what the right path forward would be, I'd imagine it's him. So I'll shoot him a message or a call again later and see what I can fucking dig up or freaking. God dang it, dude. I'm sorry. I know people in chat keep telling me don't swear because I think you got your kids around or something. I apologize, man.
No. My son's at school, but
okay.
It's okay. Right. It's okay.
It's a bad habit, man. When I was in the army, we swore every other word, man. So it's just tough to break those habits. No good.
Hey, no judgment. I am a pretty much a PG channel just because I live my life around a 6-year-old, so it's like just how I'm used to talking. I get it, man. Right now, but
and I'm a 25-year-old bachelor, so we live in different lifestyles, you know.
Yep, it happens. All right, well, thanks for having me. I really appreciate it. I don't want to take up more of your time today.
Yeah. Before you dip, bro, let me just show people where you're at and where they can find you. If you'd like to check out Booksy. Here he is. It's Mr. Books. Let me just link this, and I'll pin it to the chat bar in case people want to come check you out. And what's your Twitter handle, man? What's your at?
Good question. It's also at Mr. Booksy, but there's no dot. It's just at Mr. Booksy. I guess I could show you. Hang on.
I got it. Here's his Twitter if you guys want to check him out. At Mr. Booksy, if you'd like to check him out, his stuff's right there. That's a really cool thing, man. That's awesome. I'm glad that you caught that, and I hope that the clip when I throw it up gets some attention on it because that's ultimately what's important. So I'll follow through. I'm gonna get a hold of Dave and see what he thinks of this entire situation, and if he's got something of importance, man, we'll freaking cross that bridge and get some stuff done.
Sounds great. Yeah. Hey, just real quick. If I don't know if you guys can see my Twitter without following, it doesn't really matter to me if you want to follow or not. But there's a pinned post on my Twitter page that actually has the SEC emails that I've been emailing. So if people want to and they just want to, hey, I just want to like contact the SEC about it, I put the prices and everything on there, so you guys can literally just like kind of copy and paste it and send an email. That'd be really helpful. So just FYI.
Yeah, of course,
right at the top. So,
hey, bro, let me tell you this personally, okay? The drama, the noise, the nonsense, all this stuff, right? Some days it can be difficult to keep your head up and keep walking forward, bro. But I want to take the time out of the day to personally thank you for what you're doing, man. I know it might not seem like a big deal. You might be doing these streams with 100 people and thinking, fuck, I wish I could get this out to more guys. But hey, those are 100 people whose lives you're impacting, bro, for real. So don't forget that. Yeah. Don't feel like your purpose is meaningless. Don't feel like you make no difference, because you do. And if you didn't talk about that, I wouldn't have freaking found it. So keep doing what you're doing, man. Don't be discouraged. You're doing great work, and I'm thankful for you. So thank you.
Thanks. Hey, I appreciate it, Trey. You have a good one, man. Thank you.
Yeah, you take it easy, bro.
All right.
Peace.
Bye-bye.
Hey, Dave. How you doing, man?
Hey, Trey. I'm good. How are you?
Good. Did I catch you at a bad time, dude?
No, it's just my first day back. I've been gone for the last 2.5 weeks, almost 3 weeks, actually.
Yeah, vacation, right?
Digging out.
Yeah, man. That's good. Well, I'm sorry to catch you at a bad time. Welcome back, man.
No worries. Thanks. Yeah. How you doing?
I'm good, man. I'm good. I want to start off first by telling you I'm live on YouTube right now. I've got you on speaker. Is that okay?
Yeah, sure.
All right. Cool. I had a question for you. I figured you're sort of the smartest guy in the room to talk to about this stuff. I was talking with a guy on Twitter. His handle is Mr. Booksy, and he was looking at the charts for AMC. And you sort of know how everything got kind of washed and weird after the ape dividend. Like it took a while for TradingView to adjust the chart. Some brokers didn't adjust the chart at all. So he looked into this, and there's a pretty large discrepancy in pricing and the way that the charts are lining up. And he sort of contacted some of these different brokers like Webull, Moomoo, TradingView, and asked where they're getting their information from to have such large discrepancies. Like, for example, they've got the all-time high for AMC on TradingView at like $44, but on Webull they had it at 48. And a $4 discrepancy seems like a pretty big deal, especially when you consider that using a chart is basically dependent on the fact that the information is all coherent and all lines up right, So I suppose my question, it's a two-parter, is in this scenario, why is this possible? And then I suppose the tag along would be, how can this get fixed?
It's a really good question.
I figured I have no idea, man, so.
It's very much not an easy one. Let me see what I can find real quick as I look through this. First of all, what's important to understand is that all of these sort of values in these systems come from various data series, and then those data series have the raw numbers and then the adjusted numbers, right? And so the raw numbers is, okay, well, what was the actual price that it hit as a 52-week high? But the problem with raw numbers is certainly, when you have a split or a dividend, those things change what, you could call the effective value, right? Like,
sure.
You can't compare, a $44 high pre-dividend with, wherever it's trading $8 today, for obvious reasons, right? There's value that was pulled out, and
sure.
It didn't just disappear, and so that kind of comparison isn't right. So I can tell you, like, I'm looking real quick and at our data, and I see the 52-week range, the high. You're not gonna like this. It's at 52.79. Which lines up with what Yahoo is showing. So right off the bat, I can tell you that the terminal and Yahoo agree. Now, that being said, I think that's an unadjusted number. If I look at Google, I see the 52-week high is 32.73. Well, that's the year, actually. So that's probably not 52 weeks. So that's only this year. So sorry, that's not right. But let me see. So if I look at Google, I see the same thing. Like in September 2021, it traded at over a $52 handle. So, but I think these numbers are unadjusted, and I think that this is a really weird situation because normally a dividend has a very specific value.
Right.
Like it's a cents per share, and it's really easy to adjust your previous data off that fixed value. To tell you the truth, I'm not even sure exactly how you make this adjustment. Maybe you take the closing price of APE on the first day that it traded, or maybe you take the opening price.
Yeah, I'm thinking the latter. See, my sort of anticipation, what I'd imagine is whatever the value of APE was, let's say that it opened at $7, you take $7 off of AMC from share price, and that should give you really the adjusted 52-week high, right? 52-week high, 52-week low. You just adjust it based on literally that dollar sign. But here's the problem is the opening price has actually been adjusted as time has passed. So there seems to be something pretty weird on this. And the individual I spoke with, Mr. Booksy, he's on Twitter if you want to check him out. He's actually contacted these brokers, and they're all basically pointing fingers at each other and saying, my data's right. And every single one has different data. So
yeah, forget the brokers. Like, the brokers don't care. They're not investing in this. They to them, the only thing that brokers care about are things that make you trade more. And so, if this is not going to make their customers trade more, they're not going to invest in it. So I don't think you're going to get good data on brokerage platforms. I mean, that's why we built the terminal.
Absolutely, yeah.
But this is this is a really interesting question. So let me come back to you on it.
Sure.
Because I'd like to see how our data providers code the adjustment factor for this. Because that's basically what you do is you get this raw data, and then you get a time series, which is an adjustment factor. And that's how you can do proper research, is you can understand what things we're trading at that time, in that point in time data, as well as what that is relative to the current time. And I'm kind of curious how this was handled. I hadn't thought about it before. And then, so let me come back to you, because I want to make sure we're adjusting our data correctly too.
Yeah. No, I figured you'd find this interesting. So I'm glad I'm not the only one who's kind of just fucking dumbfounded at how little sense this makes. I thought I was just stupid. So that's good to hear.
As usual, that's not the case.
Yeah, good stuff. I suppose the only question that I'd really like an answer to, if you can find it, and I'll look around too. So the only question I have is, how can we get it fixed? Because there is such a huge discrepancy that it almost feels like you could have arbitrage opportunities depending on where retail is paying the most attention, right? I mean, we know that big money sort of tracks retail sentiment and has data on all these different things. And let's just say hypothetically that, I don't know, the majority of retail uses TradingView, just as an example, and it's completely different numbers than what's actually being used on Wall Street. Well, we can see how this is problematic. It's not really a good thing that we're not given the whole picture. So
yeah, I think that's right. So let me take a look, and I'll come back to you as soon as I can.
All right, I appreciate your time, Dave. Thank you, man.
All right, sure thing, man. Take it easy.
You too.
Bye.
There's that.